welcome back to the deep dive. So we've got this huge stack of sources you sent in, and they all tackle one thing: Japan's fiscal investment and loan program, or, FILP.
Right. FILP.
And the one word that comes up over and over again is opaque. It's this massive, critical part of the state's architecture, but nobody seems to have a clear picture of what it actually is.
Well, yeah, and when analysts do try to describe it, the words are always a bit loaded. You hear things like, once massive, now obscure, or politically risky.
A shadow budget. I've
Yep.
seen that one a lot.
Exactly. But here's the thing. If we look at it from a systems design perspective, that unclarity isn't really a flaw. It's more of a side effect
A side effect of what?
of its fundamental design. It was never built to be a responsive short-term policy tool. It was designed to be a financial operating system for the long haul. We're talking decades.
Okay, so that sets up our core idea for this deep dive perfectly. We need to stop thinking about it like a quarterly report and start thinking of it with a different metaphor.
The internal bank.
The internal bank. A system that circulates these enormous national funds, but inside the state, sort of shielded from the day-to-day chaos of the external market.
Precisely. And that's where the confusion comes from. It's not about whether FILP is good or bad in an ideological sense. The problem is a temporal mismatch.
A mismatch in time.
Yeah. The system is designed to operate on a 30-year timeline, but we're all standing here judging it with a 12-month ruler. The observation is just fundamentally misaligned with the object.
Okay, so let's define this internal bank metaphor, because I think that's the key.
Yeah.
In a corporate setting, what does that actually mean?
In the corporate world, it's a really smart mechanism. I mean, imagine you're a huge company with lots of different divisions.
Right.
The internal bank centralizes all the extra cash from your profitable divisions, and then it strategically allocates that capital to long-term bets. Things like R&D or building a new factory, stuff that won't pay off for 5, maybe 10 years.
And the key function is isolation.
Isolation is crucial. It shields that strategic long-term money from the short-term panic of the stock market and shareholder demands for immediate profit.
So if you map that idea onto post-war Japan, I mean, the scale is just staggering. Let's talk about the funding side of FILP, because that's where it all started.
The funding sources were just immense, and they were reliable and insulated. We're mainly talking about the capital from the public's postal savings accounts and postal insurance.
So everyday people savings.
Exactly. The state essentially centralized the average citizen's savings to create this dedicated, self-renewing pool of what you could call patient capital.
And that stability, that patience, is what allowed for these huge nation-building projects.
Absolutely. The money was allocated to things like large-scale infrastructure, the first highways, the early Shinkansen lines, and setting up all sorts of public institutions that were vital for that post-war growth.
And how is it supposed to get paid back?
The whole system was designed around long-term, predictable repayment cycles, quasi-market returns over decades. The point was never to make a quick buck. It was to build institutional capital that could exist outside of that boom and bust cycle.
Okay, but this raises a huge question, one that always comes up. If it was so isolated and stable, why did it end up with so much political baggage, so much bad debt? Doesn't a scandal or a massive failure prove the isolation didn't work?
That is the critical question. For decades, the isolation mechanism did work. That funding pool from postal savings was so enormous, it could just absorb a lot of inefficiencies, even some politically motivated projects, without failing immediately.
It was too big to fail, in a sense.
In a sense, yeah. But as the system got older and political pressures mounted to use it for, say, bailouts or increasingly marginal projects, that rigidity, its slowness, became a liability.
How so?
Think of it like ballast in a giant ship. Keeps you stable in choppy water. But if the ballast tank itself springs a leak, the ship is so massive and slow that you can't correct course quickly.
Ah, I see. So it's a circulatory system, but one that's separate from the immediate financial nervous system.
Yeah.
And this brings us right to that core conflict you mentioned, the stock versus flow mismatch.
Exactly. Let's break that down. First, you have the flow side. This is the timeline we all live and breathe.
Annual budgets, breaking news about the economy, elections cycles.
Right. Everything on the flow side demands immediate, visible, and politically simple results. Now,
And then there's the stock side, the deep layer.
this is the realm of physical, non-liquid capital. We're talking infrastructure that will be used by 3 generations. We're talking about institutional credit that underpins entire sectors. It's all inherently slow. It's built for durability, not speed.
And FILP is planted firmly on the stock side.
It is. It's designed to create lasting capital. But especially since the 90s, how is it judged? Almost entirely by flow criteria.
Did it boost this quarter's GDP? Was the money spent efficiently in this single fiscal year? Did it help win the next election?
Precisely. And that structural misalignment is why the political debates are so frustrated
Yeah.
and frustrating.
We're basically looking at the performance of a nuclear power plant built to last 50 years.
And judging it based on last month's electricity bill.
Yes.
You're using short-term logs to judge a long-term operating system.
So what's the consequence of that?
The criticism becomes incredibly emotional or absolute. If a big policy bank that's funded by FILP doesn't produce an immediate economic stimulus, people don't say, maybe its temporal coordinate is misaligned.
No, they say it's corrupt or it's obsolete.
Exactly, because against the metrics of the flow layer, immediacy, speed, efficiency, it is failing. The metrics themselves are the problem.
That friction, that heat, it feels like a physical symptom of these different speeds grinding against each other, which I think brings us to the systems architecture idea you mentioned, the concept of shear.
Yes, shear.
Yeah.
In this context, shear is just the friction you get when different layers of a system move at radically different speeds. You can think of the national architecture as having 3 of these speed layers.
Okay, what's the fastest?
The high-speed layer. That's what grabs all our attention. It's the world of markets, public opinion, the 24-hour news cycle, daily politics. Its time frame is, seconds to maybe a year. It's all about agility.
Got it. Then what's below that?
The medium speed layer. This is more organizational. It's the bureaucracy, ministry operations, how budgets actually get executed. It works on a cycle of, say, 1 to 5 years. It's slow, but it still has to report back to the high-speed layer.
And FILP is in the basement, the low-speed layer.
Way down there. This is where infrastructure lives. We're talking about operational horizons of 10, 20, 30 years. This layer is designed to be slow. Its whole purpose is to be stable, to filter out the noise and panic from the high-speed layer above.
So the friction, the shear happens where these layers meet.
It happens when the language of the high-speed layer tries to judge the low-speed layer. When the media demands an immediate, tweetable justification for a 20-year toll road amortization plan, the low-speed layer literally cannot comply. It's structurally impossible.
And what does that friction look like in the real world?
It looks like political distrust. It looks like conspiracy narratives.
Yeah.
If a system can't explain its value in the fast, simple language of today's news cycle, the assumption isn't that it's just operating on a different clock.
The assumption is that it's hiding something.
Exactly. And this gets to the real risk of any long-term system. Its successes are often invisible. A bridge that didn't collapse, an institution that provided stability for 40 years. But its failures take a decade to surface, and by then, corrections are painfully slow. You can't just pivot a 30-year project in one budget cycle.
And that slowness, that lag between cause and effect, it gets boiled down into these really potent but maybe inaccurate labels. The sources call it linguistic compression.
That's a great term for it. Linguistic compression is when you squeeze immense, slow-moving complexity into a simple, politically useful soundbite. So instead of a nuanced discussion about institutional aging, you just call the system obsolete.
Or opaque, or run by vested interests.
Right. And those terms might capture a genuine feeling of frustration, but they don't describe the systemic reality. The system looks corrupt or broken simply because it wasn't designed to be fast in the first place.
So if we step back from all this, the big realization isn't about passing a moral judgment on FILP. It's not good or bad.
Yeah.
The real question we should be asking is, for which time layer was this system designed? And maybe more importantly, where is its slow operational speed now dangerously out of sync with the speed of modern society?
That shift in framing is everything, because it helps us escape this false binary you always see in politics. When a big, slow system like this is seen as a problem, the debate is always abolish it or ignore it.
Right, but abolishing it would be a huge shock to the system. You'd be cutting off circulation to all this long-term infrastructure.
And ignoring it just lets the problem get worse. The internal bank keeps running on obsolete rules, and the misalignment with society just grows.
Well, there has to be a third option.
There is. The third path, which is maybe the most difficult, is translation.
Translation. Okay, what does that look like in practice? How do you translate a financial system?
It means you have to explicitly and constantly define the speed difference. You have to redescribe the system's role using its correct time coordinate. We had to stop talking about FILP as if it's an immediate economic countermeasure.
Because when you use that language, that flow language, it's guaranteed to look like a failure.
Guaranteed. So instead of demanding to know how much GDP growth some FILP-funded institution created last quarter, the question has to change.
The question should be something like, how well is this mechanism holding a financial commitment to the next generation?
Exactly. You translate its role. You start calling it a cross-generational internal financial OS. The goal of translation isn't to excuse failure or corruption. It's to reduce systemic risk by making sure everyone is using the right ruler. If the public and politicians know they're dealing with a 30-year system, they're less likely to judge it with a one-year metric.
That is a really powerful shift. So the big takeaway here is that FILP isn't just some dusty old relic. It was this incredible attempt to hold multiple futures, all moving at different speeds, all at the same time.
Yes. And our entire view of it changes depending on the lens we use. Do we condemn it as a failure because it doesn't fit today's metrics, or do we read it as a design choice that now needs to be translated for a much faster world?
And this framework, I mean, it applies to so much more than just one Japanese institution.
Oh, absolutely.
So the final thought for you, the listener, isn't a simple verdict on FILP. It's a framework for observation that you can apply to any massive, long-standing system.
When you come across one of these institutions, start by asking, where is this system still working as a long-term anchor? And where is its slowness creating too much friction with the society of today?
And if you see a similar internal bank, and they exist everywhere, in governments, huge companies, even universities, ask yourself how they are managing that same fundamental stock versus flow mismatch.
And maybe the most important coordinate we can leave you with is this. The next time you read a news story about some big, impenetrable, seemingly obsolete organization, just pause and ask yourself one question. Which time layer was this system designed for? And from which speed layer is my judgment of it coming?
Because understanding that temporal gap, that's the fastest way to cut through all the political noise.